Students, welcome back to the session on Ind AS. So today we are starting with business combinations. Our plan is to cover business combination and the consolidation of financial statements. And for the purposes of consolidation of financial statements, it will be better to understand about the accounting of business combinations first of all. So that's why you can say it's a series wherein first topic that we are picking up is business combinations. Okay. So let us first of all understand about business combinations as to what business combinations really mean. Business combinations is all about combining a business, which could be in various forms. You must have heard about amalgamations. You must have heard about mergers, demergers. You must have heard about acquisition of companies, wherein significant stake is acquired, and these transactions happen to be significant. In fact, currently it's about corona situation which is going on. Otherwise, prior to this, there was a significant number of transactions, in fact, which were taking place in respect of such type of business takeovers. Even during corona times, because of distress situation, a lot of such transactions have taken place wherein many businesses have been acquired by various other persons. And all of these things require certain accounting. And those accounting requirements have been dealt under Ind AS 103, that is under business combinations. Okay, so this is basically the background as to where we need to apply business combinations broadly. Now to start with, under Ind AS 103, we first need to understand as to which transaction will get accounted for under Ind AS 103. All right, yeah. And what will be the sequence in terms of accounting requirements when it comes to the accounting of business combination vis-a-vis consolidated financial statements, because this again is very important aspect, and this may create a lot of confusion in your mind when we eventually go to consolidated financial statements, that is Ind AS 110. So we'll talk about this aspect as well. So first of all, we'll now concentrate only on the aspect of business combination. That means its means which transaction will get covered under business combination. Okay, yeah. So I'll just take you to a presentation now. All right. Now for a business combination means when we need to identify a business combination, a couple of things are required. One, whether a business is getting acquired or not, means we need to assess that whatever is getting acquired will form a business or not. Okay, that's the first step. Now, what is a business? That is again, we need to understand, because business in the common parlance, you must be knowing that's a business is something we understand. But still, the requirement of business as per this standard is also something which we need to additionally cover. So whatever we understand about business in common parlance will remain same, but there are certain important things in respect of a business which you can say will be a sort of criteria which one has to fulfill for that to be called as a business as per the definition of Ind AS 103. Yeah. Okay. Number two, that is about control. Now, till the time control is not obtained, so that means if we acquire a business, but control has not been obtained, means the acquirer could not obtain control in respect of that business, then such a business will not be considered to be a business combination. Now, how is the control established? This is another thing which we'll have to understand. Yeah. So that means there are a couple of things which become important, or you can say which are the requirements for business combination accounting to be done, or you can say these are the criterias which are required to be fulfilled for us to establish that yes, it's a business combination for which accounting as per business combination should be done. Okay, yeah. Now we will begin with control and then we'll move on to business. Okay, so I'll just take you to an example to understand what do we mean by control over here. I received one query from Rohit. Rohit is asking, sir, this presentation is not available at the site. Yes, of course, this presentation is not available, but don't worry. All the presentations which we will discuss will also be shared with you. So don't worry about it. Huh? So currently you need to focus only on the discussion that we are having in the class, and you will not be impacted by not sharing of this presentation. This will come to you. Yeah. Okay. So let's begin with control. Now, what do we mean by control? So let's suppose there are two parties. We have B Limited. It's a company whose business is acquired by A Limited. Yeah. Now, in this case, who will become the acquirer? A Limited becomes the acquirer. Who will become the acquiree? B Limited becomes the acquiree. Okay. Now, these are some of the terms you'll have to just remember always. Now, acquirer is actually acquiring a company. Which company is this? B Limited. And we understand that B Limited is not a shell company. Shell company means it has got some business in this. Means this company has a business. So if B Limited is getting acquired, that means business is also getting acquired. Now again you have a question, so what is this business? So we will come to the definition of business separately. Okay. Now, when this acquisition is taking place, this acquisition could be in various forms. Let's understand. It may happen that A Limited acquires 10% equity shares of B Limited. Okay, yeah. Now, with 10% equity shares, generally, we cannot say that the control will be established. Generally. Yeah, because for control to be obtained, certain criteria are required to be met, which will generally not be met when only 10% stake is acquired. Yeah. Number two option. A Limited acquires 90% shares of B Limited. Let's suppose instead of 10, A Limited acquires 90% equity shares of B Limited. Now, in this situation, when the stake acquired is significant, correct? Significant. In fact, it's majority stake. In such a case, we will generally be saying that the stake which has been obtained by A Limited will also give A Limited control over B Limited, and we'll come to those points also. Correct? Yeah. So let's suppose with 10%, there was no control. Okay, and let's suppose other than B Limited, A Limited also acquired C Limited, and for C Limited it was 90%. wherein we say it's a control. Understood? Yeah. Now in this case, situation number one, or you can say case number one, wherein B Limited is getting acquired, will that fall under business combination? The answer is no. Why? Because there is no control. So even though business is getting acquired in this case, but it is not giving the acquirer control over this business for some reason. That's why accounting as per Ind AS 103 will not apply on this. Okay, so we'll say Ind AS 103 will not apply. Some other standard will apply. We'll talk about that separately. In this case, wherein control is obtained in respect of business of C Limited, in such a case, what do we say? In such a case, we will say that whenever such control will be obtained in respect of C Limited by A Limited, then A Limited will do accounting as per Ind AS 103. In this case, Ind AS 103 accounting will be required to be done. Yeah, clear? Are you clear on the starting point as to when the accounting will start? All of you clear on this? Any questions from your side on this point? There are a couple of things which are yet to be discussed in detail. That is about meaning of business and also about meaning of control. We'll come to that separately. For the time being, are you clear on the meaning? Are you clear on the cutoff date or the situation where Ind AS 103 will apply and where Ind AS 103 will not apply? Yeah, clear? Okay. Now moving further. For the purposes of Ind AS 103, now another very important point which we need to understand and remember always is about the person who will do the accounting as per Ind AS 103. Ind AS 103 talks about accounting requirements of acquirer. See, when B Limited's business is getting acquired, we are saying Ind AS 103 will not apply. So there is no problem over here. As far as Ind AS 103 is concerned, there is no problem. But in case of C Limited, we understand Ind AS 103 applies. Now a question arises, who will apply Ind AS 103? Will it be A Limited, will it be C Limited, or will it be both? So the answer is that acquisition accounting means the accounting as per Ind AS 103 will be done by A Limited. So it will not be done by C Limited. It will be done by A Limited. Means acquirer will do the accounting as per Ind AS 103. It's not the acquiree. Okay. Next point clear? Who will do the accounting as per Ind AS 103? So first thing is we have understood when will the accounting apply or when will the accounting be done as per Ind AS 103. Second, who will do the accounting as per Ind AS 103? Correct? Yeah. Kaustav has a query. Kaustav is saying, sir, when we say accounting, we mean accounting with respect to acquisition. Yes, that's correct. Now, another point, let's understand this cutoff. Okay, yeah, let's understand this cutoff because this will help you to understand this in a better manner. Say on 1st of July 2020, stake in C Limited is acquired. 90%. Yeah. And let's suppose if we also go to year end, 31st March 2021. Now, because 1st July is the date when control is acquired. We are assuming control is acquired for the time being, correct? So control is acquired by A Limited in respect of business of C Limited on 1st July 2020. Yeah. Now there are two things which you again need to remember, and you can just please note down all of these points, because these are very important for the purposes of your notes. On 1st July 2020, A Limited will do the accounting as per Ind AS 103. But after 1st July 2020, no further accounting as per Ind AS 103 is required to be done. Except in a particular situation, in an exceptional situation, we'll talk about that separately. Okay. So that means, what's the date on which accounting will be done? As per Ind AS 103, it's 1st of July. We will not wait for the year end. The point is, we will not wait for the year end. We will not say that, okay, this acquisition has taken place during the year, so at the end of the year, we'll do the accounting. No. So even if accounting entry is passed later on, what's the date on which accounting is required to be done? That's the date of acquisition. And what is the date of acquisition? 1st July 2020 in this example. Okay, yeah. So we can say on 1st July 2020, Ind AS 103 will apply. Or you can say accounting as per Ind AS 103 will be done in the books of A Limited. Yeah. Challa is saying, sir, please explain with one practical example. So Challa, I think this example should help you. Now, going further, when this acquisition accounting is done, what is required going further? After 1st of July 2020, because A Limited has obtained control over C Limited, can you tell me what will be the relationship between these two companies? Quickly, because there is something which I am just trying to link over here. Quickly, can you tell me now what will be the relationship between these two companies? Vaibhavi is asking, sir, instead of A Limited, C Limited acquires A Limited, then C Limited will do the accounting as per Ind AS 103. Of course, yes. Yeah. Okay, quickly. Now, can you tell me that let's suppose A Limited has acquired C Limited and A Limited has control over C Limited. What will be the relationship between these two companies? Quickly, I'm waiting for a response. I'm sure you know about this. Okay, Costa is saying, sir, it's about holding subsidiary. Chavi is saying it's about acquirer and acquiring. Very good. Bhujita is also saying it's about holding and subsidiary. Great. Now, because C Limited has become subsidiary of A Limited, so what does it mean? It means now, starting this date, consolidated financial statements will also be required to be prepared. Is that correct or not? Because C Limited has become subsidiary, so what will arise? Now consolidated financial statements will also be required to be prepared. Yes. And when will the consolidated financial statements be required to be prepared? Starting from the date when the control is obtained. That means starting from this date and till the time control is retained, means for the purposes of financial statements up to 31st March 2021. What will be prepared? consolidated financial statements. And for consolidated financial statements, which standard do we apply? Ind AS 110. Now, this is again very important point, I would say, which you need to understand, because there will be a lot of confusion in your mind as we move further, and when we'll move from Ind AS 103 to Ind AS 110. Because this is a very common problem which arises. Sir, when do we do the accounting of Ind AS 103? When do we do the accounting of Ind AS 110? Okay, now are you clear on this point? That Ind AS 103 accounting will be done on the date of acquisition. And starting from this date, what will start applying on the acquirer? On the acquirer, additional standard will apply. That will be Ind AS 110, for which acquirer will have to prepare consolidated financial statements. Okay, yeah, clear? So Ind AS 103 is only for a particular day, and after that, which standard will take over from Ind AS 103? Ind AS 110, which is about consolidated financial statements. Okay, Chala, you are clear on this now? Tell me, you're clear? Any more questions from your side? So this was all about starting, or you can say understanding of how to begin with this standard, which all things you need to understand in terms of the timing of application of accounting requirements of this standard. And when will Ind AS 110 come into the picture? Or at what point of time we need to consider Ind AS 103 and Ind AS 110? Clear? Chala, you are clear? Yeah? Okay, so then I can just move further. Okay, so now let's understand about control briefly. See, about control, as we have understood that control happens to be the most important criteria to be established for Ind AS 103 accounting. If control is not there, Ind AS 103 cannot be applied. Correct? But the definition of control, the details around control are given in Ind AS 110. And you may be thinking, but sir, Ind AS 110 is about consolidated financial statements. That's correct. That's absolutely correct. The only thing is that if we have to understand whether control is obtained or not, then we need to know about control, for which explanation, for which guidance is available in which standard? Ind AS 110. Okay. So when we will cover Ind AS 110, we will understand about control in more detail. As of now, I am just broadly giving you the principles. Broadly. Okay. First principle. Power over the investee. If A Limited gets power over C Limited, now in our example, A Limited is getting 90% shares of C Limited. So if with those 90% shares, A Limited will get power over C Limited. Investee means whose shares are getting acquired or whose stake is getting acquired, whose business is getting acquired. Then in such a case, what will happen? First criteria of control as per Ind AS 110 will be fulfilled. Number two, investors should be exposed to variable returns of investing. Now, what does it mean? That A Limited should get exposed to variable returns of C Limited by acquiring the business of C Limited. If that happens, I'm saying if that happens, then we will say second criteria of control is established. Now, how is this possible? If A Limited will acquire 90% shares, so will it mean that whenever C Limited will earn profits, so 90% will belong to A Limited, correct? If C Limited makes losses, then its 90% share belongs to A Limited, correct? So in a way, what has happened? A Limited has got exposed to those profits or losses, or you can say variable returns of C Limited. So if that has happened, what do we say? We will say, yes, this criteria is also fulfilled. This criteria is also fulfilled. Okay. So the first criteria says that A Limited should get power over C Limited. Power means all the activities of C Limited, all the decision making of C Limited should be driven through A Limited. I'm just telling you broadly. There are a lot of principles which we need to understand in more detail, which we'll cover later on. But for the timing, we're just broadly understanding this. So one, A should get power over C. B, A should get exposed to variable returns over C. C, third criteria. It also gives third criteria. Third criteria says, through the power which A has, A should be able to influence the variable returns of C, which is again possible. Because if A will have power, then A will be able to influence the variable returns of C. Correct? Yeah. Now, in case all the three conditions are fulfilled, in case all these three criteria are met, then we will say control is established. Only then. Yeah. Then we will say control is established. If these criteria are not fulfilled, then control is not said to be established, in which case business combination is not possible, as we have discussed. So for business combination to become possible, what do we need? This control to be established. All right. Yeah. And as I told you, for the time being, we just need to broadly understand the requirements of control. You may have a lot of questions around control, all of which will get answered when we'll move on to Ind AS 110. Okay. Yeah. In the meantime, I received a couple of queries. Let me just get on to those queries. Kaustav is asking, sir, what if control is obtained on 31st of March instead of 1st of July in our example? Do we have to do consolidation accounting as per Ind AS 110 on 31st of March along with accounting as per Ind AS 103? Yes, that's correct. We will have to do both the accounting on 31st of March in such a case. And I think, okay, next one is not a query. Yes, any more doubts in case you have? So we have broadly talked about the requirements of control, which one has to establish. See, throughout this standard, means in days 103, we will assume that control will be established until unless it's specified otherwise in the question. We will not get into the assessment of control. Yeah, because that will not be the focus area under Ind AS 103. But when we move to Ind AS 110, there will start assessing this. Clear? Yeah. So for the time being, for the purposes of our discussion of Ind AS 1103, we will just keep assuming that yes, this control is established. Otherwise, we will not be able to do Ind AS 103 accounting. Okay, clear? Next thing, for the purposes of business combination, another criteria, or you can say another condition which has to be fulfilled is about the existence of a business which will get acquired. Correct? So if we acquire a company, let's suppose, but the company doesn't have any business, so can we in that case say it's a business combination? No. The answer is no. Let's suppose if any acquisition has taken place which involves assets, liabilities, but for some reason it cannot be established that such an entity or such acquisition doesn't have any business. If it cannot be established that such acquisition has got any business, in such a case, can we do the accounting as per Ind AS 103? No, not at all. So for the accounting as per Ind AS 103, business has to be there, which should be acquired by the acquirer. So that's why we will now move on to this second important criteria or second important condition for us to understand whether Ind AS and 103 accounting is possible or not. So now we'll start discussing about the meaning of business. So what does the standard require on business, or in what situation we will say that it's a business or not a business? Okay, yeah. Now, so for business to be there are three things which the standard requires: input, process, and output. Standard says that for a business to be there, we need to check whether there is any input or not, and whether there is any process or not, which will convert those inputs into output, or which will convert that input into output. Just give me 1 minute. If there will be any process which will be able to convert that input into any output, only then we can say it's a business. Otherwise, we cannot say it's a business. Now, what can be the input? And you may be thinking, sir, does it mean that it's like manufacturing company wherein we buy raw material and the raw material is then processed or used in the manufacturing process and through which finished goods are produced? So are we saying those are the inputs and finished goods are the output? No, it's not about a manufacturing process. It's all about business. Let's understand how. See, what is the input? Input for any organization, for any business, could be the people. Input could be the people. Input could be the resources which would be available which will move through a process. Now, what can be a process? Process can be a set of activities. Converting those inputs, or which will be capable of using those inputs so that the desired output can be obtained. Now, what can be the desired output? Or you can say, what can be the output for the purposes of our discussion? Output for the purposes of our discussion will be profit. Yeah, we can say it's about profit. A business will require profits. Correct? Now, for profits to be generated, what do we need? Again, we need some inputs. For example, a company may have tangible assets, those can become the inputs. A company may have intangible assets, those may become the inputs. And those assets, or the set of assets or liabilities, or the group of assets or liabilities, may require certain operational activities which will exist in an entity, and which will require use of those tangible or intangible assets, or both, and using which, or with the combination of which, what will the entity achieve? Entity will get some output. Correct? Yeah. So this is what we call a business as. Now, in this situation, standard says that in certain cases, it's possible that there's no output. It's possible that there's no output. But in no situation, in no situation it's possible that input or process is not there. So what do we mean to say here? Standard says input has to be there, plus process should be there, which should result in output. In certain cases, it's possible that an entity may not have any output. This is missing. So can we say that because the output is missing, that's why it will not be considered to be a business? The answer is no. Even without output, in certain cases, just by having only inputs and processes, we can call a business as a business. But if a business, or if a so-called business doesn't have a process, doesn't have the input, then it cannot be considered to be a business. That means for business, what all things are required? Three things are required: input, process, and output. Input, process, and output. Output may or may not be there in certain cases, but input and processes are a must. If those will not exist, then the business will not be considered to be a business for the purposes of Ind AS 103, which we are considering over. Yeah, for the purposes of Ind AS 103, these two are a must. But in certain cases, third output may or may not be there. And it can be best understood with the help of some examples. Okay. So now what we will do is, we'll now move on to some practical examples, some small examples, to understand about the requirements of input, output, or which all things are important. So let's look at this situation. Biotech A is an entity. It acquires outstanding shares in Biotech B. And what is Biotech B? Biotech B is a startup company and it has got a license for a product candidate. Okay, so it has got some license. Due to loss of funding, Biotech B doesn't have any employee. It doesn't have any other asset. Okay, yeah. Neither clinical trials nor development are currently performed in respect of Biotech B. So Biotech B has just got one license. That's it. But no trials are going on. No development is currently being performed. However, Biotech A, after acquiring Biotech B, so this acquisition has taken place. Biotech A, after acquisition, will commence phase 1 clinical tests. Because if Biotech A is acquiring Biotech B, so this license will also come to A. So A's plan is that they will commence clinical tests. Now in this situation, can we say that there's a business combination, or forget about business combination? Can we say there's a business? Yes or no? Let's think about it. Can we say there's a business in this situation? And please don't go by the answer which could be there on the screen. Just think about it. Because the answer may not be correct. Ambika, this is the example which will help you. And we are going to discuss many examples now. So all of these examples will help you to understand the concept of this business. Okay? Yeah? Yes, quickly. Can you all start sharing your inputs around this example now? What do you think? Will this be considered to be a business or not? And why? Quickly. What do you think? Will this be considered to be a business or not? Chella is asking, sir, the acquisition of dormant companies not covered under the definition of business? Of course, yes, because if it's a dormant company, if it doesn't have any business, if it doesn't have any process, if it doesn't have any input, then of course it will not be considered to be business. Yeah? Yes, quickly. Can you please answer this one? Okay. Nanda Usha is asking, Nanda Usha is saying, no, it's not a business. And why is this not a business? Because if we apply 3 criteria for a business, first, what's the criteria? It should have some input. And do we have an input in Biotech B? Yes. License is there. There's an intangible asset. It's a resource using which some output is possible to be generated. But do we have any process in this entity? Not at all. Can we see any process in Biotech B? There's no process at all. There's no set of activity in Biotech B right now when it is getting acquired, which will convert, or with the help of which some output can be generated. So that's why, can we say it's a business? The answer is no. Preeti is saying, sir, input is employees are not there to carry out process, so no output as well as not a business. So that's true. But in this case, there was some input. License was there, intangible asset is there. So we cannot say there's no input at all. Input is there, but yes, process is missing. And you may be right that, sir, we also need people, because without people, how can we say that this license will be of any use? So it's a possibility. So let's suppose company doesn't have any employee, but company has outsourced all of its work. So still it can be used. So it's not necessary that employees have to be there. Even without employees, it's possible. Yeah. So input is there, but yes, your answer is correct. It's not a business. Devankar is saying, it's not a business because there's no process. Kaustav is saying, sir, it will be a business because even though biotech B does not have employees, I think response of Kaustav is partially received. It's not complete. I'll just wait for your responses on this second scenario now. We can move on to the second scenario now. Biotech A acquires outstanding shares in Biotech B. And what is Biotech B? It's again a startup company with a license for a product candidate. Okay. Phase 1 clinical tests are currently performed. Means Biotech B is doing this by 3 employees of Biotech B, one of whom was also the founder of Biotech B and who also discovered this product candidate. Okay. Now in this situation, we need to check whether there is any business or not. And you must be able to see the differences now in scenario 1 as compared to scenario 2. Can you see the difference? Yes or no? Now, in this situation, what do you think? Will this be a business or not? And if you believe it will be a business, why it should be a business? Quickly. And once again, just think about it yourself and share your responses. Chavi's response has just come to me. It's about scenario 1, wherein Chavi is saying that it's not a business. That's true. Now, can you answer about scenario number 2? Will you call this to be a business or not? Ambika is saying, sir, in this scenario, clinical tests are being performed. So there is definitely a process. And hence, it should be a business. Now, in this case, even though you are calling this to be a business, please go back to the understanding which we obtained. That for a business, 3 things were mandatory. Please don't forget that. For a business, 3 things were mandatory. What were those 3 things? Input, process, and output. In this case, do we have any input? Of course, yes. We have input in the form of license. We have input in the form of people. Employees are there. And this entity also involves a set of activities. What are those activities? Those are operational and management processes associated with performance and supervision of clinical tests which are going on. So there's definitely a process. But currently, can we say that these processes and inputs are generating any output? No, there's no output right now. But still, can we say it can be considered as a business? Yes, because it's a development stage entity. Any development stage entity will not necessarily have any output because the output may take some time to be generated. But the important thing is, are the processes and inputs in a combined manner capable of generating any output or not? Yes, there's a capability. So that's why in respect of development stage entities, what do we say? We will say that even though there's no output, still, if this acquisition takes place, that will be considered to be a business within the meaning of Ind AS 103. Clear? All of you? Kaustav is saying, yes, sir, it will be called as a business. Best there's input which is licensed. There's input which is licensed, process which is clinical tests. Pujita is also saying it's a business. And Divankar is saying, because in this case tests are being performed, that's why it has to be a business. And same is the response from Preet. Vaibhavi is also saying it's a business. And I'm hoping that you have now understood some scenarios wherein what will happen if there's no output, or what can be a situation of a business without an output, or what will be the situation when there is no output and no process. Now for us, let us go back to our understanding, which is important, that for a business, what's the must? Input and processes are a must. In scenario number 1, input was there, but because process was not there, that's why we didn't consider that to be a business. Clear? Yeah? Okay. Now with this principle of acquisition of a business, another concept is attached that is called as acquisition of assets. Okay. And which can be best understood with the help of this example. So let's read this example. Huh? Company A acquires land and a vacant building from company B. No processes, other assets or employees, for example, lease and other contracts, maintenance or security personnel or a leasing office are acquired in the transaction. Now in this situation, again the question remains same, whether it will be considered to be a business or not. Yes, quickly, I'll wait for your answers. In the meantime, I'll answer the query of Challa. Challa is asking, sir, if a new company comes to the market with the acquisition of some other company without any previous establishment, will that be covered under Ind AS 103? See, whether it's about old company or new company, it doesn't matter. Important criteria which we need to check is what? Whether there's business or not. And of course, the other criteria which we need to check is whether control will be there or not. If both the things are established, then Ind AS 103 will apply, otherwise not. Okay? Yes, let's quickly get back to this activity number 2, scenario number 1. Now in this situation, can we say there's a business or not? Quickly. Can we say there's a business or not? Ambika is saying that there's input in the form of land and building, but there's no process. Process is missing, sir. That's why Ambika is saying it's not a business. What about others? Chavi is saying, sir, not a business because there is no process. Very good. And same is the response from Pujita and Divankar. Very good. Now in this case, again, we have the similar problem. Process is missing. And when the process is missing, business is not established. Correct? Now, if you'll understand, though it's very easy for you to comment, there's no business, but there's also another point which you need to understand. So I'm talking about this situation only. Yeah? We are saying land is getting acquired, building is getting acquired. Correct? And at the same time, you have established, all of you have established that Ind AS 103 will not apply. This is something which I can see from inputs. Kaustav and Vaibhavi have also refused to accept this as a business, which is good. Now in this situation, a question arises. a question arises that acquisition has taken place. There's no doubt about it. And one entity, let's suppose it's A Limited. Huh? Let's suppose A Limited has acquired from B Limited these two assets. And all of you are saying no, will not accept Ind AS 103 accounting. But the transaction has taken place. We need to understand that. And we are the chartered accountants. If the transaction has taken place, accounting will be required to be done. Isn't it? Can we say that because Ind AS 103 will not apply, so the accounting will also not be required to be done? The answer is no. Accounting will have to be done. Now we are stuck. Because at one place we are saying that Ind AS 103 will not apply, but at the same time we also understand that the transaction has taken place. So what do we do? Where do we go? How do we resolve this? Can you tell me what do we do in this situation? Does it mean that the accounting will not be done? Tell me quickly. In this case, what do we do? When A Limited has acquired these assets, what will happen? Quickly. Yes, quickly. Can you tell me now in this situation, what will happen? What do we do? I'm waiting for your inputs, huh? Quickly, what do we do? Do we do the accounting or not? Okay, great. Chavi is saying, sir, in this case, this will be considered to be an acquisition of asset. Now let's go back to basic principles of accounting. Whenever we acquire any asset and not the business, do we do its accounting or not? Let's suppose if you purchase the land, if you purchase any building, will you do the accounting of purchase of building, purchase of land or not? Yes. And how will you do that accounting? Ind AS 16. You'll apply Ind AS 16. And I'm hoping that you would have covered Ind AS 16 by now. Yes or no? Now in this situation, once again, what will happen? Now in this situation, once again, you will have to go back to another Ind AS or maybe some of the general principles like Ambika mentioned will have to be considered as against Ind AS 103. Because the transaction has taken place. That's why accounting will be done. And if for some reason 103 is not applicable, that doesn't mean that no other standard will apply. We'll have to now find out which other standard will apply. And the other standard which will be relevant in relation to acquisition of those assets will have to be applied. Now in this case, because the assets acquired are tangible assets, land, building, that's why which standard will become relevant? Ind AS 16. So what will A Limited do? A Limited will apply Ind AS 16. That is for property, plant and equipment in respect of acquisition of assets. And instead of calling this to be a business combination, what will A Limited call it as? This will be technically termed as assets acquisition. Okay, this will be technically termed as assets acquisition. So many a times this term will arise. Difference between business combination and asset acquisition. You can also say it could be a theoretical question. Yeah. And definitely this assessment will also be required to be done many a times in the question itself. So how do we do that? Very simple. The moment we establish business is not there, where do we go? It has to be an asset acquisition. Now clear on this? Yeah. In this example, because the land and building are getting acquired, so that's why now this will be considered to be a transaction in the nature of assets acquisition. Okay, clear? Ambika is saying, sir, it may be as per Ind AS 2, like inventory, because it is real estate developer. Of course, yes. Of course, yes. It may also get covered under Ind AS 2 if that happens to be kept as inventory in the nature of, if that happens to be an asset which will be kept like inventory. So that will again depend on the intent. Because it's a real estate developer, so not necessarily this will be held for sale. This may be held for leasing also. Yeah. So wherein we will have to just understand the requirements. It may be Ind AS 40 also. Ind AS 40, which is about investment property. Okay. So this is only an example which I'm giving you. We'll have to just understand. We have to assess which other Ind AS will apply. Clear? Shall I say, sir, if a company doing the activity of brokerage by way of using the brand name of that company, if a company doing the activity of brokerage by way of using the brand name of that company, brand name because of its previous activities, now that has been stopped. Is it a business? Because here no process exists but generates output in the form of commission. Yes, of course. See, if this company is doing the brokerage business, that means there is a set of activities. Yes, yes or no? There is a set of activities. And this set of activities also generating some output, which you are saying is in the form of returns. Now to say there is no output is not possible, because definitely there is an input. Sorry, and to say there is no input is not possible. Definitely there will be an input. There will be people, there will be employees, there will be certain contracts through which this process is resulting any output. Okay, yeah. So I'm hoping with this you are clear as around our discussion on the meaning of business. So what we can do now is we can pick up some examples from the study material to discuss about business further. So what we can do is we can just move on to this example number 2. On page number 13.14, example number 2. Let's get on to this example, please. Yeah. All of you, you're there on this example number 2. Yeah. Okay. Company X is a liquor manufacturer and has traded for a number of years. Company produces a wide variety of liquor and employs a workforce of machine operators, testers, and other operational, marketing, and administrative staff. It owns and operates a factory, warehouse, machinery, and holds raw material inventory and finished products. On 1st January 2000 X1, company Y pays USD 80 million to acquire 100% of the ordinary voting shares of X. Okay. No other type of shares have been issued by company X. On the same day, the four main executive directors of company Y take on the same roles in company X. In this case, it is clear that company X is a business. Yes or no? If we talk about company X, which is getting acquired by company Y, are we clear that there's a business? Yes. Why? Because there's an input, there's a process, and there's definitely an output. Correct? If you look at company X, it operates a trade with a variety of assets that are used by its employees in a number of related activities. These assets and activities are necessarily integrated in order to create and sell the company's products. As per the definition, the above acquisition includes inputs, and thus it can be concluded as significant process acquired along with other inputs. Yeah. Now the other point is that company Y obtains control or not. So it says company Y obtains control on 1st of January 2000X1 by acquiring 100% of the voting rights. So if the acquisition involves 100% voting rights, so it's been established in the example that yes, control is there. So if the control is there and it's a business, so can we say Ind AS 103 will apply? Yes, Ind AS 103 will therefore apply. Clear? Yeah. Okay, so now we can move on to another example. Example number 6. So we can move on to page number 13.16, please now. Example 6. Okay. If you have any questions, any doubts, Nanda Usha is asking, sir, please say in new syllabus question number. I didn't understand your point, Nanda Usha. I think you need to just please elaborate on what is your query. Are you talking about the reference of this in the study material? Okay, so in the meantime, I'm just starting with example number 6. Company S is a manufacturer of wide range of products. Company's payroll and accounting system is managed as a separate cost center, supporting all the operating segments and the head office functions. Company A agrees to acquire the trade. So this is company S and A is agreeing to acquire. Yeah. Trade, assets, liabilities, and workforce of operating segments of S. Operating segments is the plan. So A will not acquire S wholly. A will acquire operating segments of S. A does not acquire payroll and accounting cost center or any head office functions. A was the competitor of S. Okay. In this case, activities and assets within the operating segments are capable of being managed as a business, and therefore company A will account for this acquisition as a business combination. The payroll, accounting cost center, administrative head office functions are typically not used to create outputs and so are generally not considered as essential element in assessing whether there will be business or not. Correct? So let me just specify this once again. Excluding payroll, accounting. Now A has come and A wants to acquire operating segments of S. But A is saying, I will not acquire your payroll function. I will not acquire your accounting function. Now the question arises that if A is acquiring some part of S, so will that some part of S constitute a business? Will that be considered to be business? The answer is yes. Why? Because if A acquires operating segments, we need to understand whether those segments are capable with the help of inputs as well as processes to generate any output or not, which is there. And if you look at payroll and accounting, what are these functions? These are cost centers. These are back-end operations. They are not really required to generate any output in the form of something which can be considered to be a business activity. Clear? All of you? Yeah. Okay, Nanda Usha is saying, so question number 2 is different in my book. See, it's possible that there may have been certain updations in the study material. So that's why it's advisable that you refer the latest study material, which is available on the ICAI website. You can just please download that from the ICAI website. It's available right now. Yeah, you can just go to the link, download that, and it's better that you pick up the latest version because all of our references will be from latest version only. And any of the changes, any of the updations, you'll be able to understand. Okay. Yeah. Okay, moving on to next example, number 7. Example number 7. Company A is a property development company with a number of subsidiary companies, each of which holds a single development. After completion of the development, Company A sells its equity investment because the applicable tax rate is lower than applicable rate to the sale of underlying property. Company A is planning to start the development of a large new retail complex. Rather than incorporating a new company, A acquires entire share capital of a shell company. Shell company does not contain an integrated set of activities. Is that true? Yes, of course. Because if you look at A, what is A? A acquires entire share capital of shell company. Correct? Shell company does not contain any set of activities. And therefore, it will not constitute a business because if the set of activities are not there, which are integrated with process because that will be able to generate the output. So what do we say in such a situation? In such a situation, this will not constitute a business. Consequently, Company A should account for purchase of shell company in the same way as the incorporation of a new subsidiary. Correct. In the consolidated financial statements, any cost which will be incurred will be accounted for in accordance with any other Ind AS. But this will not be something which will fall within the meaning of Ind AS 103. Okay, clear? Now we can move on to illustration number 2. Chala is asking, sir, what do we mean by cost centers, which we discussed in the previous example? That means I think that was example number 6. See, cost center, you can say, is a department through which only costs are incurred. So if you take an example of a company, let's suppose a company has got 2 functions. One is a sales function, second is accounting function. Now, sale function will generate sales. Sales department will generate sales, and therefore the profits will be generated. Correct? That's why in such a company, sales department, sales function will be considered to be a profit center. Means the department which is generating profits. But can we say that because of accounting, profits will be generated? No. So that's why such function will be considered to be a function which is only incurring a cost. There's only cost which will arise because of accounting. Yes or no? Yeah. So that's why such functions which only lead to costs, which do not generate any profits, are called as cost centers. Clear? Yeah. Now, with this understanding, I would suggest you should go back to that example and read that once again. Okay. Now, I'm moving to illustration number 2, which you need to answer, all of you. Illustration number 2, you need to answer, please. Company A is a pharmaceutical company. Since inception, company has been conducting in-house research and development activities through its skilled workforce and recently obtained an intellectual property right in the form of patents over certain drugs. The company has a production plant that has recently obtained regulatory approvals. However, the company has not earned any revenue so far and does not have any customer contract. Also. Company B acquires this company A. Now, for A, we are saying they are doing some R&D activities. Number 1, they have skilled workforce. They have also obtained IPR, intellectual property rights. They have also obtained intellectual property rights. That means patents. Okay, they have got patents. They have got the necessary regulatory approvals. Regulatory approvals are also there. But they don't have any revenue. So sales are nil. Customer contracts. None. Okay. No customer contract, no sales. Now, A is acquiring B. Sorry, I think B acquires A. Company B acquires A. And let's assume B gets control over A. Okay, this thing is missing in the question. Let's assume B gets control over A. Okay, now in this situation, can you tell me, will this be considered to be a business combination or not? All of you, please don't look at the answer of the study material. And I'm hoping you would have not done that. Can you please answer this on your own? Will this be considered to be a business combination or not? Yes, quickly. Will you call this to be a business combination or not? Yes or no? Quickly, please. Yes, I'm waiting for a response. Will you call this to be a business combination or not? Chavi is saying, sir, it's a business because it has inputs as well as processes. Okay, but output is missing. Ambika is saying, sir, yes, it's a business because input is there, IPR. So just by having an input, can we say it will become a business? Vastav is saying, sir, A will constitute a business because input is there in the form of IPR, workforce, regulatory approvals, processes are there, in-house research activities which are integrated with all of these inputs. Yeah. But even if output is missing, still we can consider this to be a business. Why? Because this is an entity which is into development stage. Correct? Divakar is also saying, yes, it's a business. Very good. Chala is saying, sir, where is it defined the definition of business? That means in which standard? See, Challa, I think you need to just please understand that we are discussing all about Ind AS 103. So everything will come from Ind AS 103 only. Okay. Yeah. So in this case, will this be a business or not? Yes, it's a business. The definition of business. Now I'm reading the solution. The definition of business requires existence of inputs and processes. In this case, skilled workforce, manufacturing plant, IPR, along with strategic and operational processes constitute inputs, and the processes in line with the requirements of Ind AS 103 constitute a business. When the said inputs and processes are applied as an integrated set, company A will be capable of producing outputs. The fact that company A currently does not have revenue is not relevant to the analysis of the definition of business under Ind AS 103. Basis this and presuming that company A would have been able to obtain access to customers that will purchase the output whenever it is generated, the present case can be said to constitute a business under Ind AS 103. Okay, clear? Yeah. Now moving further. So we'll now continue on the same example with certain changes. So moving on to next illustration. Modifying this illustration, if company A had revenue contracts and a sales force such that company B acquires all the inputs and processes other than sales force, then whether the definition of business is met. So we are now saying, we are modifying it, wherein we are saying A had revenue contracts. So we are saying customer contracts are there. Do they have customer contracts? Yes. Okay, so they have customer contracts. And sales force is also there. There is also sales force. So you can say workforce will include the sales force. Okay, This workforce means what? People will include sales team. Salesforce means sales team, sales department. So they are saying A has got revenue contracts and A has also got sales team. But A acquires all the inputs. A is acquiring entire A. B acquires entire A other than Salesforce. So B is acquiring everything. All of this is acquired by B except Salesforce. Now in this situation, a question arises that because B is acquiring everything, B is acquiring A completely, but B is leaving Salesforce of A. That is not getting acquired. So in such a case, can we say there will be a business or not? Yes, I'll wait for the response now. I think Vaibhavi and Pujita answered the last illustration. Okay, I received your responses a bit late. No problem. Now, can you please answer around illustration number 3, please? What do you think? Will this be considered to be a business or not? Yes, I'm waiting for a response. Ambika is saying, yes, sir, it will be a business. Okay, what about others? I'm waiting for your inputs. Costav is saying, yes, sir, it will still be a business because Salesforce is just one component of input which has not been acquired. All other components of input are acquired along with all the processes. All right, what about others? Divakar is saying, yes, sir, it's business because input and processes are required. Okay, what about others? Chavi is saying maybe. So Chavi is not sure. And maybe will not work, Chavi. Huh? You need to be very, very sure about it. Please don't get confused on this. And Chavi is giving a reason. Chavi is saying some maybe because if B will be able to arrange a workforce separately, of course they may be able to, because otherwise why won't they acquire a workforce? Yes or no? Okay, so let's get to the solution. Of course, this should be a reason. See, in this case, though the sales force has not been taken over, however, if the missing inputs, Salesforce can be easily replicated. Replicated means reconstituted or acquired from some other place, or maybe this B already has a sales force which can activate its own sales force in respect of activities which this sales force was doing. It may be concluded that A has got business. Further, if B is also into similar line of business, then the existing sales force of B may also be relevant to mitigate the missing input. Therefore, this will meet the criteria of Ind AS 103. Okay, clear? Pujita is saying complete acquisition without sales force will again be a business combination. Why? Because acquiree will be able to bring in the necessary workforce on its own. Yes, that's true. Clear? Yeah. All right. Yeah. So with this, we are done with our discussion in relation to meaning of business. So far, all this while, whatever we have discussed so far was about understanding as to which transaction will get covered under business combination and which one will not get covered. Okay. All through. This has been the basis. You can say only the basic stuff has been discussed by us. Now we need to get on to the requirements related to acquisition account. Now, what is acquisition accounting? Acquisition accounting means the accounting which the acquirer will do. And before we get on to those accounting requirements, there are a few more things, or you can say there are certain concepts, there are certain principles which you need to understand to apply that acquisition accounting. So now we will move further. We will now move beyond this identification of business combination. And now we will move towards that accounting requirements of business combination. Okay, clear? But before I think we start with this, we can take a break. And after the break, we will just continue with our discussion on business combination. All right? Yeah. So let's take a break of 10 minutes and then we will continue our discussion. Yeah. J. J. J लाइक कर दो प्लीज. Hi, welcome back. So we'll now continue with our discussion. So far as we discussed about identification of a business combination. Now we'll move on to the accounting requirements of business combination. Under business combination, the accounting which acquirer does is technically termed as acquisition method of accounting or acquisition accounting. So very commonly now we will start using a term acquisition accounting. Acquisition accounting, as we have discussed, will mean the accounting which the acquirer will be required to do. This acquisition accounting requires understanding of certain concepts which are there on the screen right now. Who is the acquirer? What is the date of acquisition? What all assets, liabilities are getting acquired along with the business? And finally, the computation of goodwill or say capital reserve. And finally, we can also say it's about the accounting under the business combination. So we can say these are basically the steps which one has to understand in the context of a business combination. So we'll now start with all of these points one by one. We'll understand about all of these things in more detail. And with the help of this, we'll eventually reach to the business combination accounting, that means acquisition accounting. So the first step, which again can be a point of confusion for many, is about identifying who is the acquirer. So for a company, let's suppose, which is getting acquired by another company, a question may arise, who is acquiring whom? So how do we establish who is the acquirer? So in that case, what do we say? Acquirer has to be the one who obtains control over another entity. Very simply. That is also the condition for business combination. You remember we discussed? So the same thing will help us to decide who will become the acquirer in a business combination. Out of two entities, whichever entity will get control over another entity will become the acquirer for the purposes of accounting as per business combination. Simply. And what does control means? As we have discussed, that meaning of control is something which has been explained under Ind AS 110 and which requires three criteria to be established. One, power over the investee. Second, exposure to variable returns of the investee. Third, influencing the variable returns to the power which the investor will have over the investee. Now, whenever any acquisition will take place, we'll have to then decide, we'll have to then assess that out of these two parties which are involved in an acquisition, which party is getting the control. So the party which will get the control over another party will be considered to be the acquirer for the purposes of doing acquisition accounting. Simple, easy to understand. Still, there are certain points which can help us to decide about the acquirer. That means over and above the points which we'll see, we can also look at some of these points. Acquirer is usually the entity that transfers cash or other assets or incurs liabilities. Let's understand what does it mean. So what do we mean when we say this? Just give me 1 minute. So we are talking about a situation wherein A is acquiring B. So that means B is transferring business to A. B will transfer business to A. So if B will transfer business to A will also be required to pay something. Yes or no? So B will have shareholders. B will have shareholders. Yeah. When the business of B, or you can say B itself, is getting acquired by A, in return, A will also be required to pay something to the shareholders of B from whom A is acquiring the business or A is acquiring the shares. Now, this consideration or this return from A to B is called as consideration paid by A to B. This is also called as purchase consideration. And this purchase consideration could be in various forms. One, it could be through cash, means money is paid. Number two, maybe some assets have been given. Maybe instead of paying money, A has given some assets to shareholders of B as part of the purchase consideration, correct? Or a very common thing which is done, A might have issued equity shares. A might have issued equity shares. So A may say that I will issue my equity shares to you as part of purchase consideration. Yeah. Or maybe some other instrument is issued by A as part of this purchase consideration. Correct? So any of these forms you may see in respect of purchase consideration. So that is also one of the ways through which we can check. Generally, that is how we generally check who is the acquirer. Acquirer is usually the entity that issues its equity instruments. This one. Acquirer normally has the largest proportion of voting rights, because only with that acquirer will get the control. Yes or no? Acquirer will have the ability to elect or appoint or remove majority of the members of governing body of the combined entity. That is again something you get to see in case of acquirer. Yes or no? Yeah. Now, having said all of these points, what do we see? If you look at all of these points, what do they establish? They are all indicative. So you can say these are only the examples, or these are some of the ways through which standard helps us to identify the acquirer. The basic basic principle which we cannot forget for the purposes of identification of acquirer is what? That acquirer has to be the one who gets control. Clear? Yeah. So the basis which you have to just remember at every point of time is that even after looking at all of these points, one thing which you will have to establish will be what? That acquirer should get control over the acquirer. Only then he will become the acquirer. Correct? Clear on this? How do we identify the acquirer or who will be the acquirer? Yes? All of you? Any questions, any doubts? I think this was fairly easy to discuss. This was fairly easy to understand. Yes or no? This was fairly easy to understand. Yeah? Any questions, any doubts on the acquirer from your side? Tell me, I'll wait for your queries. No? Okay, then moving further. Now the next step. Next step is to decide about the date of acquisition. And you may be thinking, sir, is this also a decision or is it also something which is complex? Because date of acquisition is what? Whenever the entity is acquired, that will become the date of acquisition. That's true. But there are a lot of things which are required to be analyzed for us to conclude as to what will be the date of acquisition. Let's understand this point. I would say in any business combination, one of the most difficult decision happens to be assessment of date of acquisition. Mostly. Assessment of date of acquisition happens to be one of the most difficult decisions. And there are reasons for this. Yeah. Let's understand. And for this, we need to just look at few points, first of all. So once again, I'll just take you to the board and we'll understand what could be the complexity in deciding about date of acquisition. Divakar is asking, sir, can the acquirer may be other than entity? Means he is saying, is it possible that acquirer can be other than a company? Of course, yes. Acquirer can be an individual, acquirer can be a company, acquirer can be a partnership firm. It can be anybody. Yeah. Now, talking about date of acquisition. In the example that we discussed towards the initial part of our session, we discussed that 1st of July 2020 an acquisition took place and the year end will be 31st March 2021. Okay. And we discussed that the accounting of acquisition accounting will be required to be done on 1st of July 2020. That means Ind AS 103 will be required to be applied on 1st July 2020. Remember? Now the question arises that how do we identify this date? Means the date on which this accounting will have to be applied as per Ind AS 103. And I'll show you the complexity which may be involved in this. Yeah? Just give me 1 minute. I'll show you the complexity which may be involved in this. See, acquiring a business is not something which is a matter of a day. It takes number of days for this acquisition to get completed. In fact, at times it runs into months. At times it runs into months for this acquisition to get completed. And that's why it becomes very, very important to understand and analyze all of those events which might have taken place for the purposes of this acquisition to decide about the date of acquisition. And I'll also give you some events. Let's understand this. So let's suppose this is the date when entity planned or plans to acquire. So internally, entity planned that they will acquire another company. Okay. And we are talking about acquirer now. So let's suppose this was 30th May 2020. Let's suppose on 10th June 2020, board approved acquisition plan. Because it's a company, so they will require approval of the board. So they will require approval of the board to acquire another company. So board approved acquisition of another company on 10th of June. Yeah. Let's suppose on 15th of July 2020. Sale agreement was signed. Now for acquiring another company, sale agreement was signed with another company on 15th of July. Okay. Let's suppose on 31st July 2020, purchase consideration was paid. On 31st of July 2020, purchase consideration was paid. Okay. Let's suppose on 25th of August 2020, this company entity, I'm calling this as A. Okay. A got control over B. Let's suppose B is the entity which will be acquired or which has been acquired by A. So A got control over B on 25th of August. How? So majority of board of directors of B came from A. So A got its directors placed on the board of B on this date. Now the majority board of directors of B are from whom? A's side. So that's why A has got control over this. Okay. Yeah. Now you can see there are so many dates which are all towards this process of acquisition. Correct? Yeah, they are all towards this process of acquisition. Now, considering this, can you tell me which out of these dates you will consider as the date on which business combination accounting will be done? You need to tell me the date along with your thought process, along with the reason. Quickly. Yes, I'm waiting for a response. Tell me, which out of these dates you will consider as the date of acquisition? So what do we need to check? Date of acquisition. Yes, over to you. Waiting for a response. Yes, quickly. Okay, great. Nanda Usha is saying, sir, it should be 25th of August. Okay, so this is first option. Pujita is saying, sir, 10th of June 2020 should be the date of acquisition. Very good. What about others? I'm sure I'll receive many responses on this. It's so easy for you to comment. Chella is saying, sir, 25th of August should be the date of acquisition. Okay, so Chella is also going with this. What about others? What do you think should be the date of acquisition in this case? Vaibhavi is saying that 25th of August should be the date of acquisition. What about others? Quickly. Please remember there are so many things on this date. Entire money has been paid. On 31st July, entire money has been paid by A to B. Please remember that there are a lot of activities, a lot of events, all of them are critical. Okay, last response is from February. What about others? Yes, I'm waiting for the responses. Divakar is saying, sir, because the consideration is paid, that's why it should be 31st of July. Correct. So this can also be a thought for deciding the date of acquisition because entire money has been paid. So what is left after that? Nothing is left after that. Yes. All of you, tell me. Okay, Chavi is saying, sir, 25th August. I'll pick because significant control transfers over there. Okay. Any more thoughts from your side? No? Okay, so let's understand about this. Yeah. Though I have not received as much responses which I wanted, but still some of the responses are indicating some sort of confusion. See, there are a lot of dates for us to choose from, and the dates are very simple. What are those dates? Each and every date is a step towards the acquisition or a step towards completion of acquisition. Correct? Now, because of this, generally there is a confusion that should this be the date when entire purchase consideration has been paid? Should this be the date when the business combination accounting should be done? Or should this be the date when the agreement is signed? Because now the two parties are committed. Both the parties have agreed. Both the parties are committed. It's binding to both the parties. Or should this be the board approval? Because if the board approval is done, then what else is pending? Nothing is pending. It's only a process of signing of the agreement of paying of consideration which is pending. Or should we wait for the control to be obtained in respect of that another entity? And in certain situations, let me just tell you, this may also be, it may also be possible that sale agreement is signed after this. So let's suppose sale agreement is signed on 31st of August. Possible or not? Yes. It may also happen that purchase consideration is paid after this, say on 30th September. So a lot of options are there, and every time in a business combination, it's not a simple or same set of activities or same, you can say, order of events which will continue. No, it will vary depending on transaction to transaction. Therefore, in such a case, it becomes very, very difficult to decide what will be the date of acquisition. And for that, once again, we need to go back to our understanding of the basic principle of business combination. What did it say? That business combination will exist only when control will exist. If there is no control, there is no business combination. That's why for us, when should the accounting of business combination be done? When the acquirer obtains control over the acquiring. We just need to simply go by that date. When the acquirer obtains control over the acquiring. In this case, when is that happening? On 25th of August. Because that is when A is getting control over B. So that's why in this situation, what should be the date of acquisition? Date of acquisition will be 25th of August. Okay, yeah. Now, another point which we need to consider. Let's suppose everything is done which has been considered over here, but some regulatory approval was pending. Which was obtained on 30th September. And let's suppose the company applied for this regulatory approval on this date. Let's suppose on 30th June 2020, application filed with the regulatory authority. Okay. Application is filed with regulatory authority on 30th June. Now, once again, the same confusion is required to be settled, that with these two additional events, what should be the conclusion around date of acquisition? What should be the conclusion around date of acquisition? Should we still say that 35th of August 2020 will be the date of acquisition, or will this now change? Now, in this case, we need to understand that even though control is obtained on 25th of August, but still regulatory approval is pending. And whenever any regulatory approval is pending, in such a case, what do we need to check? We need to check whether that regulatory approval is substantive in nature or not. We need to bifurcate this into two parts. Yeah, we need to bifurcate this into two parts, whether it's substantive in nature or not, or whether it is only administrative in nature. Because if the regulatory approval is substantive, then till the time regulatory approval is not obtained, we cannot do business combination accounting. But if it is only administrative means that sooner or later this regulatory approval will come. Means it's more of a formality. It will take time. It will take time. It may take few months, it may take few days, it may take few weeks. But we are sure that regulatory approval will come for sure. But if we are not sure that whether the regulatory approval will come for this business combination, for this acquisition or not, then it is not considered to be only administrative, then it is considered to be a substantive condition. Substantive. In such a case, we cannot do business combination accounting till the time regulatory approval is obtained. Now, once again, whether that regulatory approval is substantive or not has to be assessed on a case-to-case basis for your purposes. You need not worry. In the exam, you will be given about this. You will get to know in the question itself that whether it is substantive or not. Okay, but you need to remember that whenever regulatory approval is substantive in nature, then the business combination accounting cannot start before this. Clear on this? Clear on this point? Yeah? All of you? Any questions, any doubts in case you have? Now we can move on to some examples to discuss this. Yeah? Okay, so let's move on to illustration number 7 on page number 13.27. So we'll now move on to some examples to discuss about this date of acquisition. And you need to answer all of these questions. Huh? All right. Yeah, all ready? Ready to answer? Can an acquiring entity account for a business combination based on a signed non-binding letter of intent where the exchange of consideration and other conditions are expected to be completed within next 2 months? So that means today a signed letter of intent is there, but all other conditions will be fulfilled after 2 months. So the question is, do we say that the date of acquisition will be the date of this signed letter of intent or the other date when all other conditions are fulfilled? Okay, tell me quickly. And again, I would suggest all of you, please don't go to the solution of study material. Just try to think about it and then answer. Divakar is asking, sir, what is the date of acquisition in present case? As we discussed, the date of acquisition in the example we discussed was the date when the company obtained control. And in case the regulatory approval is substantive, then it will be the date when regulatory approval is obtained. Okay. Tell me quickly. Now, in this example, illustration number 7, should we say that this should become the date of acquisition? No? Okay. As per the requirement of standard, a non-binding letter of intent does not effectively transfer control, and hence this cannot be considered as the date basis for determining date of acquisition. Correct? Yeah? Okay. Moving on to illustration number 8 now. On 1st of April, X Limited agrees to acquire shares of B Limited in an all-equity deal. A Limited agreed to acquire B Limited. Okay? Sorry, it's X Limited. X Limited agrees to acquire shares of B Limited and all will be purchased in the form of equity. As per the binding agreement, X Limited will get the effective control on 1st of April. So X will also get control over B. However, so the control is on this date. However, the consideration will be paid only when the shareholders' approval is received. So let's suppose this is the date when consideration is paid. Shareholders meeting is scheduled to happen on 30th of April. So which date is this? 30th April. If the shareholders approval is not received for issue of new shares, then the consideration will be settled in cash. So let's suppose on this date, if the shareholders don't approve, then X Limited will not issue equity shares for paying B Limited. Instead, X Limited will pay cash. Okay. In this case, what will be the date of acquisition? Should this be the date of acquisition or should this be the date of acquisition? There are two dates which are given in the question, or you think there has to be some other date? Tell me quickly. I think I missed response of Ambika for the previous question. Yes, quickly about this. Chala, I'll come to your query. Yes, quickly. Cost of these things, acquisition date will be 1st April. I think Ambika is also saying 1st of April for this one. Okay, because the control is obtained on this date. Yes, and what about this shareholder approval? Is that not mandatory? Nanda Usha and Chavi are also saying it to be 1st of April. Pujita is saying control is obtained on 1st of April. Therefore, the date of acquisition is 1st of April. Very good. Yeah, it has to be 1st of April. Why? Because the date we get control. It's the date of acquisition. The only thing additionally we need to check is about the regulatory approval. If that is pending and if that is substantive, otherwise it will be date of obtaining control. Clear? Yes. So now moving on to the next illustration. Illustration number 9. In between, I have this query from Chala. Let me just move on to that query now. He's asking, sir, is there any practical for is there any practice? Your query, I think, is not worded properly. So what I can understand is there any practical for is to exist for regulatory approval is substantive or administrative in the practical practice for which I think you mean to say that does it practically happen or not, or is it only theoretical in nature? So Challa, this is more of practical point rather than theory. As I told you that for the purposes of your assessment in the examination, this fact should be made available to you in the question. But in practice, regulatory approvals are mandatory to be obtained, and they will generally be substantive in nature. Yeah, clear? Divakar is saying, sir, if the purchase consideration is fully paid, then we can assume that control is transferred even if board is constituting after the date of acquisition 1st of April 2020. I think Divakar, you must have got the answer now. Okay, now moving on to next illustration, please. Illustration number 9. ABC Limited acquired all the shares of XYZ Limited. ABC Limited acquired all the shares of XYZ Limited. The negotiations had commenced on 1st of January 2000X1. So there is a flow of events now. On 1st of January 2000X1, negotiations started. And the agreement was finalized on 1st of March. On 1st of March, agreement is finalized. While ABC obtains power to control XYZ's operations on 1st of March, okay, so ABC is getting power to control operations of XYZ on 1st of March. Agreement states that acquisition is effective from 1st of January 2000X1. So in the agreement itself, it is written that acquisition will become effective from 1st of January 2000X1 and that ABC is entitled to all the profits. So this will be the effective date. And all profits sharing starts from this date. Means ABC will start getting share of profits of XYZ from this date itself. In addition, purchase price is based on net asset position of XYZ as at 1st January 2000X1. So the pricing which ABC would pay to XYZ is also based on the position of XYZ of this date. Now in this case, there are two dates. Which out of these two dates you will call as the date of acquisition? Tell me quickly. Or please remember, in the exam it is also possible. Now please be very, very careful, because this actually happens in the exam. Now if you look at the question, it would appear to you as if you need to choose out of these two dates only. Correct or not? If you look at the current question, you will assume that either it has to be this date or this date. But has it written anywhere in the question that you need to pick the dates out of these two dates only? No. So it's very much possible that it can be date other than these two dates, which you need to specify. Okay, because it's a subjective question. It's not a multiple choice question wherein you will pick an option. So that is not available to you. Yeah? Yes. So now I'm waiting for a response on this question. Yes, quickly. Kaustav is asking, since ABC acquires power to control operations on 1st of March, it will be the date of acquisition. Other dates are not relevant. So Kaustav is going with this date. Okay, what about others? Yes, what about others? Nanda Usha is also going with 1st of March. All right. Divakar is going with 31st of January. I think he is going with this one. Huh? Divakar, this is your option. All right. Chavi is saying 1st of March. Okay. What about others? Yes, quickly. Any more responses? No? Now, once again, what do we need to check? There are a lot of things which need to be analyzed and which are very, very significant actually. One, if you look at the profit sharing that starts from 1st of January, if you look at the pricing on the basis of which deal is done, that is again based as of the position of 1st of January. But still, what is the important factor or what is the relevant factor to decide about the date of acquisition? The date when control is obtained. When is the acquirer obtaining the control? 1st of March. So that's why what will be the date of acquisition? 1st of March. Clear on this? Yeah. All other factors except the approval of regulatory authority in case that is substantive will be considered, otherwise not. Pujita is saying the date of acquisition should be this. And same is the response from Beverly. Great. Okay, so then I think we can pick up another illustration. Yes, so we can pick up another illustration now. Illustration number 10. Yes, all of you. Move on to illustration number 10, please. ABC and XYZ are manufacturers of rubber components for a particular type of equipment. ABC makes a bid for business of XYZ and the Competition Commission of India announces that the proposed transaction is to be scrutinized to ensure that competition laws are not breached. Even though the contracts are made subject to the approval of CCI, CCI is Competition Commission of India, ABC and XYZ mutually agree the terms of acquisition and the purchase price before the clearance from CCI. So in this case, ABC is acquiring the business of XYZ. Can the acquisition date in this situation be the date on which ABC and XYZ agree the terms, even though approval of CCI is awaited? So there are two dates. CCI approval, all other conditions of transfer fulfilled. on this date. Is there two dates? Let's just put the dates. Say this is 30th May, and let's put this is 15th July. Okay. Now, in this case, assuming that the CCI approval is substantive in nature, as I told you, this will be given to you in the question. What do you think will be the date of acquisition? Yes, over to you. I think this is relatively easy for you to answer. And you may be thinking, sir, so far all the things that we have answered were easy only. It's very easy, simple. Is that true? Yes or no? Quickly. Waiting for your responses. All of you, tell me quickly. Kaustav has answered this. Kaustav is saying, because the CCI approval is substantive, hence the date of acquisition should be the date of approval of CCI. That means Kaustav is saying this date cannot be the date of acquisition, even though all other conditions are fulfilled on this date. What about others? Chavi is saying 15th July, because in this case 15th July is the date when substantive condition is fulfilled. And I think so is the response of Nandavamsha, Ambika and Pujita. Great. So it's good that your responses today are aligned with each other. They are moving in the same direction, which is very, very heartening to see. Very good. Yeah. So now we can move on to the next part. Just give me 1 minute. Okay, now moving on to the next part. So far we have discussed two things. One, who is the acquirer? Second, date of acquisition. Correct? Couple of things we have discussed. Next is about the purchase consideration. Purchase consideration we have briefly discussed. Now we'll get into the details around purchase consideration. What is purchase consideration? Purchase consideration is the money which acquirer will pay for acquiring the business. Correct? And this money may not really be in the form of money, or you can say this amount could be in various forms. It could be in the form of cash, it could be in the form of assets, it could be in the form of equity instruments, or it could be in the form of any other instrument which may be issued by the acquirer. Correct? Yeah. Now, what is the requirement of the standard? What is the requirement of the standard? Standard says that this purchase consideration has to be measured at fair value. This purchase consideration has to be measured at fair value on the date of acquisition. Because on the date of acquisition, this accounting will be done. Correct? Yeah. Now, many a times, this consideration may not be paid in one go. This may be paid in tranches. This may be deferred. Deferred means payment is made in installments in a way. Now, in that case, what do we do? Let's understand one example. Yeah, let's look at this question now. ABC Limited acquired entire equity share capital of PQR for 8 crore rupees. ABC Limited paid 2 crores in cash, means 2 crore has gone through bank balance. Cash means the bank balance. And the balance INR 6 crore has been agreed to be paid to the seller in 5 years as a deferred consideration. Deferred means it will be paid after 5 years. So this is not getting paid immediately. This is getting paid after a few years. That's why this has been called as deferred consideration. How should the deferred consideration be valued for determining the consideration transferred in relation to computation of goodwill? Now the question arises that what should be the value of purchase consideration which needs to be considered on the date of acquisition? Means what will be the value of purchase consideration using which accounting as per acquisition method will be completed. Okay, clear? Question is clear to all of you? Yes. Let's move on to the solution. Ind AS 103 requires that the consideration transferred in a business combination should be measured at fair value, which should be calculated as sum of acquisition date fair value of assets transferred by the acquirer, liabilities incurred by the acquirer, and equity instruments by the acquirer. Means acquirer may issue various instruments. Fair value of all of them will become purchase consideration. Yeah. Now in this case, let's understand how this accounting will be done. So if we go back to our example, you have noted the facts. You have noted the facts. Let me just take you to the board now. Yeah. So now we'll discuss this. Now, if you look at the current situation, one consideration is getting paid after 5 years. This is 6 crore rupees. Another consideration which is getting paid on today's date. Okay, this is the date of acquisition. That means day 0, 2 crores. All in all, 6 crore will be paid. Now the question arises that on this date of acquisition, when we are doing acquisition method of account, when we are following acquisition method of accounting, what should be the total value of purchase consideration? Should we say our purchase consideration is only 2 crore? Should we say our purchase consideration is 2 plus 6, 8 crore? Or should we say purchase consideration is any other number? Okay, yeah, understood the requirement of the question? Yeah, okay. Now for this, fortunately or unfortunately, you will have to go back to the principles of financial instruments. Which may be thinking, oh, do we need to go back to the financial instruments, sir? But we don't remember anything on that. Is that true? Is that true? You remember financial instruments? There was a topic named as financial instruments. Yeah? You will have to go back to that topic. You will have to apply those principles. And what did that require? How did this financial instrument require you to compute the present value, compute the fair value. Remember the present value. How do we compute the present value? This 6 crore is paid after 5 years. So what do? We will compute its present value. We will compute its present value. How do we compute its present value? Using some discount rate. Using some discount rate. In the question, discount rate is not made available to us. And we are not getting into competition. We are just looking at the principle. Using the discount rate which is available, what do? We will compute the present value. Let's suppose its present value comes out to 4.5 crore. It's only illustrative. Don't think about the numbers as to how this has been computed. Only illustrative. So in this case, what will be the total value of purchase consideration? Total amount of purchase consideration. It will be 2 plus 4.5. That means 6.5 crore. Will be the total value of purchase consideration. Vastav is saying no, sir. We remember. Chavi is saying, sir, we know. Chavi has written, it will be present value of future cash flows. Very good. Challa is saying, sir, discounting of 5 crore will be the fair value. Okay, Vaibhavi is saying, sir, we will have to calculate the present value. Excellent. So it's great that you remember all the principles. Very good. Yeah. Clear on this? Now, purchase consideration could either be paid upfront, something like this, wherein you may have a situation that purchase consideration, let's suppose, is paid fully upfront, or it may be deferred, wherein entire purchase consideration, let's suppose, is only this, or it can be a mix of both. Some part is paid now, some part is paid later, okay, wherein you will compute its present value. Correct? Clear on this? Clear on the purchase consideration part? Yeah, whenever it will be deferred, how will you deal with that? Yes or no? Okay, so moving further. On to contingent consideration. I think I have this response from Pujita. Pujita is saying it will be valued at 2 crore plus discounted value of 6 crore, that is present value of 6 crore. So total will be 6.5 approximately, assuming some discounting factor. Great. Now purchase consideration, as we have discussed, one could be upfront, one could be deferred. There is another form of purchase consideration. Let's understand that. What is that? Another form of purchase consideration. That is called as contingent consideration. Now, whenever we will compute the purchase consideration, we will also be required to compute the fair value of contingent consideration. So let's understand the meaning of contingent consideration. So what do we mean by this? Many a times in a deal means transactions like this, buyer agrees to pay a price to the seller. Let's suppose A is the buyer, B is the seller. or maybe shareholders of B are the sellers. Many times buyer agrees to pay for acquisition of business on the basis of certain conditions which will be fulfilled in future. For example, buyer says that if the profitability of the company, let's suppose after 5 years, will increase by 20%. If the profitability of the company will increase by 20% in the next 5 years, then some additional consideration will be paid by buyer at that point of time. So today buyer is paying, let's suppose 5 crore. Buyer is saying I'll pay 2 crores more, provided profitability of the company should increase to 20% after the end of 5 years. Or buyer may say, if after 3 years market capitalization of the company increases by 15%, if after 3 years market capitalization of the company increases by 3 years, once again that will also be a consideration. And these considerations are what? These are contingent. These are contingent in nature, which are uncertain. These are uncertain. So we are not sure whether these conditions will be fulfilled or not. These are not within the control of buyer or seller. See, it's the seller or the company or the business will work hard to achieve these conditions. But it may or may not become possible. They are contingent upon occurring of some future event. That's why such type of consideration is called as contingent consideration. Okay, such type of consideration is called as contingent consideration. Clear? Whenever we will compute purchase consideration at the time of acquisition, for the purposes of applying acquisition method of accounting, fair value of contingent consideration is also required to be included. Fair value of contingent consideration is also required to be considered. Are you clear on the meaning of the contingent consideration? All of you? Tell me quickly. Are you clear on the meaning of contingent consideration? Tell me quickly. Are you clear on the meaning of contingent consideration? Yes or no? Yeah? In a contingent consideration, fair value will have to be worked out, and that should be added to the total value of any other purchase consideration. Clear? Yeah? Okay, great. Now, let's get back to the accounting requirements. Whenever there will be any contingent consideration, what do? We will have to measure that at fair value. On what date? Date of acquisition. And that will also get recognized along with the purchase consideration. Now, another thing which you need to analyze and which is now important for all of you, and considering the fact that you are saying, no, sir, we remember financial instruments. Because you are saying, sir, we remember financial instruments. So that's why let me just go back to that point here. See, now this contingent consideration which will be issued in future, this contingent consideration which will be issued in future by the buyer may take two forms, either equity or financial liability. Let's analyze it from the perspective of buyer. Buyer may have to pay some cash in future. If he has to pay cash in future, what will it become? Financial liability today. But if the buyer has to issue equity shares in future only, means he'll not pay cash, he has to issue equity shares in future, then what will it become? It will become equity and not a financial liability. And even there, what do we need to check? That the equity shares which the buyer will issue in future, is the number of those equity shares fixed today? Is the amount at which equity shares will be issued fixed today? If both of them are fixed, then it will be considered to be an equity instrument for the buyer. Otherwise, for the buyer, what will it become? Can you all tell me quickly? Otherwise, for the buyer, what will it become? Yes, I'm waiting for a response. All of you have been saying that we remember financial instruments. Quickly, tell me, in such a case, what will that instrument become? I'm saying one situation is wherein the number of equity shares are fixed, amount at which it will be issued are fixed, then it will become equity instrument. What if any of these are not fixed? What will this instrument become? Quickly, I am waiting for a response. Tell me, all of you, quickly, what will that instrument become? So we are just about to wind up the session. So don't worry, you may be thinking, sir, when will this session end? We want to just, wrap it up. Don't worry, we are coming to an end. Now you can see that the principles, the guidance of Ind AS 109, Ind AS 32 is becoming applicable over here. And this is all about getting into that interlink, because if you will not be able to interlink the requirements of these two standards, once again what will happen? You will start struggling on business combination. So this is not really business combination, but for business combination accounting, some principles of Ind AS 32 you will have to understand, you'll have to apply. So that's why it's once again very, very important for you to remember all of those guidances. Okay. Pujita has responded. Pujita is saying that in such a case, it will become a financial liability. Very good. So now, once again, when we will do business combination accounting, at that point of time, other than this fact that purchase consideration, including contingent consideration, will have to be fair valued, we will also have to remember whether this contingent consideration will be in the nature of equity or financial liability from the perspective of issuer. Clear? All of you? How this will become equity or financial liability from the perspective of issuer? I think we have spent significant time around it. Yeah? Clear on this? And depending on whether it will become equity or a financial liability, it will be required to be measured or remeasured. Correct? Yeah? Challa is saying, sir, if this is fixed to fix, if fixed to fix is not met, then it will become financial liability, and same is the response from Chavi. Great. So now, Vaibhavi is saying, sir, it will become compound financial instrument. Now, what we can also do is, I've got a couple of examples. To discuss around this principle. And through those examples, you'll also get some more clarity, not only in terms of business combination accounting or not only in terms of this purchase consideration, but also of linking some of the principles of financial instruments with this. Okay. Currently, because time is not there, so we cannot really get onto that discussion. In the next session, we'll start there. But one very important point for all of you, that tomorrow when we meet, I understand we have our session tomorrow. Tomorrow when we meet, you should make sure that you revise whatever we have discussed today. Number one. Number two, just flip through the requirements of financial instruments. Many of you have answered questions of financial instruments, which is very heartening to see. But still, just flip through the requirement of financial instruments, because some of those principles will also be required to be applied. Okay, yeah. So with this, we can just conclude our discussion now. All right, yeah, we can just conclude our discussion now. If you have any questions, you can just drop your question over here and we can have a discussion on that maybe today or tomorrow. All right, yeah. So we can just end our discussion now. Thanks to all of you once again for your time and for your wonderful participation today. Thanks so much.